Welcome back to We Talk Money. I'm your host, Chris Dunn. We've got Travis, the stock geek, and Nikki. She talks finance. What's up, guys? This is absolutely crazy what's happening right now. Meme coins have taken over the culture. It's all over TikTok. We've got Bitcoin that's almost at 100K. We've got Nvidia earnings coming out probably like an hour after we put out this episode. Microstrategy has the #1 volume of any stock in the entire world today. I feel like we're living in some kind of matrix, and I'm trying to figure out what the name of the game is that we're playing, but it feels like we're in a dream.
Have you guys seen the pictures of the books, The Intelligent Investor and The Psychology of Money, being thrown in the trash? Because like,
yeah,
nobody
traditional
understands
finance doesn't make any sense anymore.
Yeah.
Trav, I'm sorry you spent all that time at hedge funds and
yeah, no, I threw my degree in the trash. It's just no big deal. DCF. What is a DCF?
I'm feeling the same way some days.
And that's the top. Oh man. Yeah, just so much to talk about. I've been watching live price action for the past couple of days, seeing if we were going to tag 100K. Microstrategy just hit my profit target of 500 today. Had a massive move on this thing. So for anybody that doesn't know, I was buying this bad boy on the breakout at 200 and getting a little bit of selling at my main profit target today. Woo, man, I've just been in front of my computer for probably like 12 to 16 hours a day. Just so much to do, so much opportunity, so much madness, just absolutely madness.
Yeah. So the question is this our 2021 event? Like, are we close to the top? That's what people keep asking and saying, but
feels like we're just getting started.
Yeah.
Yeah. I want to believe that. And here's what I know. Like, things can stay nutty for way longer than seems reasonable, but I am seeing signs that shit is getting just overly euphoric and just weird. So a couple of the things is, okay, so we're going to talk about meme coins a lot today, just because if you don't know what's happening over here, there's a ton of money to be made and lost. And we're going to talk about, Dex Screener. We'll talk about the different apps. But one thing that makes me think that we are getting a little overheated here is the fact that Phantom app, which is one of the better ways to trade meme coins, has been rising quickly to the top of the charts. So it's now, depending on what list you're looking at, it's really close to the top. So Trav, this is a chart you just posted. What are we looking at here?
Yeah, so that shows the app rankings, and it shows both the category. I think Phantom weirdly is in the utilities category in the Apple App Store, and then it's in the finance category in the Android store. But either way, whatever chart you're looking at, you're seeing a massive, very rapid rise up the App Store ranking charts for the Phantom app. And Phantom app actually just jumped into the top 50 in the overall, so not just in its own category, but in all of the apps out there in the Apple App Store and in the Android App Store. It's now among the top 50, and I think for a brief time may even be top 10 here today. So there's definitely a major phenomenon happening here with lots of people getting involved. I know TikTok is now getting involved and starting to influence the meme coin trading space. We've just seen that in the last 12 to 24 hours. There's been some wild stuff with the high school kid rugging people, and then they sent his coin. I know we're going to talk about that, but there's also been coins like Chill Guy, which started trending and are now at a $400+ million market cap out of nowhere. And so, yeah, it was already wild, and now it's potentially getting even wilder. So it's gonna be crazy.
Yeah, this story of this kid. So for you guys that are listening to the audio podcast, I'm just playing a video of this kid who was live streaming. He created a meme coin, and then basically I don't know exactly what he said, but he was saying he wasn't going to dump. And then as soon as price went up, he dumped. And I think he made, what did he make, Trav, on this?
Around 30 grand, 20 to 30 grand. I think he even said in the video, thanks for the 20 bandos, which,
for like a 10-year-old, that's life-changing money, man.
Yeah.
So here he is. He's like, oh shit, what happened? And he starts freaking out. as it crashes, and he's like flicking everybody off saying, I took your money.
Oh my goodness.
And he's like, there he is. He's like, let's go. Oh my God. I can't believe it. And then apparently Twitter like doxed his family, and now things are getting like kind of scary and maybe dangerous for them. And I think he did it a second time too. I think he said, I'm sorry, and then created like a second pump and dump, if I'm correct on that. But
yeah, there were multiples. And then he got on a live stream with a couple of guys. And the best part about it to me, though, was that the crypto community actually sent his token much, much higher. So like he rugged the token, and normally when a token rugs, then it just essentially goes to dust. It goes to zero or near zero. But because that whole stream, that whole rug actually became a meme in and of itself, his token, which was the ticker of it was Quant, actually went up to like, I think, a multi-million-dollar market cap at one point. I don't know what it is today. But it was like revenge. Like crypto Twitter basically said, oh yeah, you wanted to rug us? Well, now we're going to make you regret selling, because we're going to send your token to the moon.
Yeah.
Funny.
Yeah. So for the market cap, if I'm looking at the wrong shitcoin here, the market cap started at, in hour one, maybe at $1 million or $2 million. And then it made it all the way up to like $80 million market cap.
My God.
And then it's pulling back now. But yeah, like, dude, let's just take a minute to like talk about how absolutely batshit insane this has become. I mean, these meme coins, which have no utility, are trading tens of billions of dollars in volume every day. Like, this is real money. And this is unlike anything we've seen before in the history of financial markets. And I actually tweeted this morning because I was trying to like, just for my own like sake of sanity here, figure out what's going on. And I said, we had penny stocks, right? And Trav, I think you had a story in college of like getting introduced to penny stocks, right?
Mm-hmm. Yep.
And I know a lot of our friends, and especially like entrepreneurial guys, had similar experiences where, most guys have this thing where either in high school or college, they take their shot at day trading, right? And most people lose. So I said, we had penny stocks. Kids nowadays have meme coins. Every young man needs to get his ass kicked in the markets to decide if he wants to take on a multi-decade journey to master his craft or join the 99% of people that lose. Because here's what happens, right? Like most people, they go into the markets, they think it's easy money, they see all this excitement, and then they lose money and they go, oh, wow, that wasn't as easy as I thought it was going to be. And the majority of people go, okay, that shit's not for me. I'm going to go a different direction, and I'm going to go be a whatever. I'm going to chase my career. And then there's a small percentage of us that go, no, I'm not going to lose at this thing. I'm going to become obsessed with it and either make it a career and do what Travis did, go work in hedge funds, or do what Nikki did, become a financial planner, or do what I did and just start trading whatever market is the most profitable, right? And so I think it's just a legendary moment in time to see that this is now not only a phenomenon in the US, which is where this this really happened in prior decades, but now it's a global thing. I mean, you got people from all corners of the globe doing this, and the numbers are just so much bigger.
I have questions. I have major questions. Let me just start asking dumb questions. First of all, first question. That kid that started the meme coin, it's like, who's buying that? What is going on here? How are these people hearing about it? Is this similar to like, is it just crypto people pumping things? I mean, how is this money getting pushed into this system so easily and quickly? That's my first question.
Gamblers and degens.
I bought some.
Okay, so like, are you just cruising for new coins just randomly, or new tokens or whatever, and seeing something called dumb coin, and you're just buying it? Like, what? How do you find them and decide which ones you're gonna buy?
These markets are driven by most things that are illegal in the regular stock market, like pump and dumping, paid promotions, wash trading, like the entire list of stuff that is illegal in the stock market is being done in meme coins right now. And they're primarily driven by influencers. And I'll give you an example. So one of the most popular guys, I think, is this guy Murad, right? He put out this like super cycle thesis. And just a couple hours ago, he tweeted, he said, these are my top 10 crypto picks for 2025. These are worth buying and holding for the coming year. So he's giving financial advice, telling people to buy and hold this shit for the next year. And he said, stop trading and believe, in all caps, believe in something. So my smartass, I had to reply and I said, I fixed this for you. So what he really should have said is, these are my current top crypto holdings. These are what I want you to buy so you can pump my bags. Don't take profit, be a bag holder. That is essentially what he's saying. And I even said like a week ago, I said, it's funny, anybody who says don't quote unquote trade and just hold long-term, usually the people that say that are either, shitcoin cult leaders or somebody who is incentivized to try to turn you into a bag holder.
Oh, like Roaring Kitty, maybe kind of with GME.
100%. Right?
I definitely don't trust anyone in the meme coin space. Anyone who's got a profile, like one of these like cartoon profile pics, which is most of everyone in the meme coin universe at this point. I don't trust the streamers. I don't trust these key opinion leaders like Murad or whoever. I don't trust them. I think everyone has nefarious motives. That being said, I do think there's an opportunity for like obviously money making, but also like education and using this as a gateway, like you said, Chris, to like learning more about actual investing and what it takes to become a real investor and what investing even is. Like there's a lot of people that are probably going to get sucked into meme coins from TikTok that have never done any real investing in their lives. And so it'll be interesting to see, maybe this can be a gateway. Maybe we can help people to actually like learn about, the broader universe of investing where things aren't just pump and dumps and just total like moonshots.
Yes. Yeah. There will be a percentage of guys and ladies that get introduced to the markets through meme coins. And I saw somebody was sharing some data the other day on Twitter that showed the percentage of addresses that actually profit more than 10,000. And it was like way less than 1%. So just like in most markets, the vast majority of people are going to lose money, but there's going to be a percentage. I don't know if it's 1% or 99%, but there's a non-0% of these people that are going to actually become like professional traders and investors. And anybody that is willing to put the time and effort in to learn how to do this the right way, I want to be like that old like grandpa being like, come here, son, come under my wing. Let me show you the ways.
I've accepted that, been around long enough. There's always going to be some way for people to lose money I don't want to say in a gambling mindset, but in a reckless way that, there's penny stocks. There were NFTs. People were going crazy over the NFTs and putting millions of dollars and losing all of it. And now we've got these shit coins that people are probably going to YOLO into and think that it's going to make them a lot of money. There's always something.
I mean, 0 days to expiration options too, right? On the stock side. We've even got sports gambling now, parlays. Yeah. I mean, we are like full on greed society at this point, right?
And with the deregulation of the SEC, I mean, I think the next few years are going to be a massive cash grab, and we're going to see some things go terribly wrong and huge volatility, but I think we have an unprecedented opportunity to make a ton of money over the next few years.
But at the same time, I think that some people are going to continue to get burned. Like you said, Chris, you have to know how to play this game. And there is a way to play it. Trav, you're a professional. You know how to play the game. Same here. I can easily trade stuff that's complete crap, but I know how to trade. So it's just, I've accepted that there's always going to be something that people are going to fall into in terms of a trap. But I just hope people don't lose their asses.
No,
but
most
they probably
people
will.
Most people will. I mean, dude, we called it, you guys called it in the stock world back in 2021, you know, the Pelotons, the GMEs, like we had some great trades on the way up, but how many hundreds of people have we heard from that are like, yeah, I didn't take profit. I listened to the influencers. I became a bag holder, right? It's the same story told in multiple different markets over multiple market cycles. There's a small percentage of people that are going to do it the right way and make life-changing wealth. And there's the mass majority of people that are going to leave with their tail between their legs with a ton of regret.
Yep. Well said. I mean, that's a timeless, like, fear and greed emotion cycle, whether, I mean, the instrument always changes. It's like you said, it's like, even though meme coins are kind of the new thing, you know, we've seen the game before. We've seen it in penny stocks. We've seen it in all the things we talked about. And I guess the question is, like, do you play the game? Do you try to play the game? And that's what a lot of people are probably asking, because it's interesting. You see like screenshots on Twitter and other places, and now on TikTok, where, you know, yeah, someone turns a couple $100 into $100 grand. That could be life-changing for some people. Those are outliers though. And it's like, it's hard to extrapolate. Like, I've been, you know, kind of playing in the sandbox and testing a bunch of meme coin trading stuff. And I've been getting chopped up, you know, like I've had some pretty nice wins. And then I've had some stuff that got rugged and went to zero. And net, I mean, my meme coin portfolio is up a good amount this year. But in the last 2 weeks, when I've really been focusing on like the high risk kind of really fast, you know, even before it lists on an exchange type stuff, like, it's just really tough. It's really random in a lot of cases, figuring out what is actually going to have a trend that's sustainable, that, you know, is 100 bagger or whatever, versus stuff that just goes to zero in 10 minutes. I mean, it's tough. It's a really tough game to play.
Yeah, it's hard. I've actually been back testing for the past week or two, just a lot of charts, and just trying to feel like, okay, what are the setups that work? How do you avoid getting rugged? You know, like, step one, don't lose a lot of money. And that's really hard because there is just no utility to these things. And it's what I love about meme coins is it's just pure, raw, degenerate, dumb money. And insiders coordinating to do pump and dumps. So it really is like the old school penny stock days, except with a lot more action. You know, it's like if penny stocks were a little one room, you know, blackjack table, this is a full on Caesar's Palace casino with every kind of game and a million times the amount of capital flowing through it. So it's fun. It can be profitable, but I just found the data on how many people lose. So this is a pump.fun trader. So pump.fun, for anybody who doesn't know, this is where a lot of the meme coins are getting created and then pushed out there. This person, Crypto Kermit, says a reminder that 60% of all the meme coin traders lost money trading meme coins. 4.7% made no money. 24% made less than $100. 11% made more than $100. Only 3% made more than $1,000, and 0.5% made more than $10,000. So the TLDR is 90% of meme coin traders either lost money or made like nothing. So that just backs up what we always talk about, that the mass majority of people are going to lose to a small percentage of people.
Can we just take a second to recap? Did that say pump.fun?
Yeah.
Okay, so it's all in the name then.
Exactly.
Pump and dumps and fun.
It's so easy to come in here and just create a meme coin. It takes like no time.
Look at the top link up there. Start a new coin, right? Like right in the brackets in the white text there, like literally at the top of the page, start a new coin, and you can do it in 5 minutes.
So should we do it?
Well, okay. So here's a couple of things to think about, right? There's, well, one, so there are thousands of coins being created like every day. In fact, maybe even tens of thousands right now in the current cycle. And a lot of them, you know, essentially just never really get any trading volume and don't end up doing what's called bonding, which is when the token bonds, it has enough volume and enough trades to actually make it to a decentralized exchange. So most tokens will not bond and make it to an exchange. Some will. Even the ones that will, a lot of those just end up being rugged or down a ton. But there's a question here which people should be asking themselves as they're creating tokens. am I creating a security? Am I opening myself up for legal risk? And I think, Chris, you made an interesting point, which is like maybe the current incoming administration, things are going to be so lax where it doesn't matter. But we saw what happened in the last cycle where, people got taken down by, by regulators. And so there are risks here. There are risks, especially if you're doing things like pump and dumping, right? If you're doing some sort of coordinated pump with people, in a Telegram chat, and then you dump on people when you say you're not going to sell, things like that, right? That's a pretty classic thing that doesn't really matter what the asset is. The SEC can come after you for that. If you're a US citizen, especially, right?
I'm asking ChatGPT, what are the illegal things that people are doing in meme coins that are illegal in the stock market, right? And I come from the world where I've seen penny stock promoters go to prison for decades. And we've all seen the ICO scammers from 2017. It's listing out, pump and dump schemes, insider trading, market manipulation, rug pulls, right? Like these are all things that I don't care who the administration is. Like if you're doing this on a big scale and people are losing millions, like even the most, conservative or liberal, I don't know how to say, but even the most lackadaisical regulators in the US are going to go after people for shit like this. So that's just a warning. All good things come to an end, which means this euphoric like meme coin craze is gonna eventually, come to an end, or at least slow down after a ton of people lose a lot and the liquidity dries up. But in the meantime, there's a lot of money to be made if you can trade these things the right way. Just ethically, I can't really ever see myself creating a coin and doing anything like that. I'd just rather trade other shit that people create.
Yeah. Dude, it'd be interesting, like if you're a securities lawyer, to like focus in on meme coins, because there's probably going to be a niche in the next couple of years of like defending lawsuits about, are meme coin securities or not, or, things like that. It's going to be the Wild West. It's going to be really interesting to see how it evolves.
Yeah.
Especially because I think, there's going to be thousands of people like this kid, for instance, last night who, probably don't even have any idea that they're, committing securities fraud. And there's thousands of them creating these small coins, most of which probably will never even get the kind of volume that his traded. But will they go after people that created something that they never really even pumped, but maybe sucked in people that lost a couple $100, right? Or will they just go after the people that create these hundreds of millions of dollar coins, and have these like groups of people coordinating the pumps? It'll be interesting to see how that plays out.
Yeah, good point. Okay, I wanted to put, we've got a ton of questions coming in from social media and our Discord channel. So I wanted to hit those, but it's funny, whenever I put out a call for questions in a bull market, it's usually what's price going to do, right? Okay, where's Bitcoin going? What happens if we hit this price? So I'm going to give my opinion at some time during the show. We can do some TA, but I'm not going to answer every single question that's like, where do we go if we break 100K, right? There's much more interesting things to talk about. So let's just jump into the first one, which is Microstrategy. Not just because it was one of my biggest trades of the year, but because it is a super interesting story, what's happening behind the scenes. And, I've talked a little bit about the bull case of, why this is like a levered play on Bitcoin, which comes with a lot of risk. And Michael Saylor, the CEO of MicroStrategy, has been buying billions and billions of dollars worth of Bitcoin, and has recently been going on a speaking tour. This week he was on Patrick Bet David, which is a huge podcast, and has just been putting out this narrative of what they're doing with the intelligent leverage strategy. Trav, I know we talked about this on our live stream a couple weeks ago, but can you just recap for people what they're doing and what the strategy is and what the upside potential is and the risks?
Yeah. Some people are calling it the infinite money glitch, which I think is wrong. But there's an interesting, some people are also calling it arbitrage. Let's just for now call it an arbitrage, where MicroStrategy's market cap is trading for, say, roughly today about 3 times the value of the Bitcoin it holds on its balance sheet. And the smart thing that they are doing is, because it's trading at such a premium, they're selling more stock and they're selling more convertible bonds to raise fresh capital at that high price to then reinvest into more Bitcoin, so that the Bitcoin on their balance sheet, the value or the amount of Bitcoin goes up. And so there's an arbitrage in the sense that they're selling the high price stock to buy more Bitcoin, and therefore increasing the intrinsic value of their stock, which is then causing the stock price to go up more, which is then allowing them to sell more stock and more convertible bonds ad infinitum. Except that doesn't last forever. And this is not a new thing. I mean, we've seen it with, things like REITs or business development companies or closed-end funds or companies like we talked about, like IEP, Icon Enterprises. Any company that buys some asset, whether it's real estate or Bitcoin or it's, other companies or it's stocks or whatever, you can buy assets, you house it on your balance sheet. And if the market is giving your stock a much, much higher value than what's on your balance sheet is worth, then you can go out and sell stock into the market and you can buy even more assets. And so that game continues to work and continues to create per share value for shareholders until your stock eventually fails to trade at a high, massive premium to the assets, or you have some other limit to the amount of assets that you can acquire. And so MicroStrategy is doing that. And, there's a couple unique aspects of it, right? Like MicroStrategy is buying an asset that's relatively scarce in Bitcoin. They're buying an asset that's been going up recently with Bitcoin. They are, trading at such a premium that, and the stock is basically, squeezing and going higher at a more rapid pace, and they're even buying Bitcoin. So it's becoming even more profitable lately for them to do so. So there's also kind of a cult following aspect to this. People love Sailor, people love BTC right now. So it's all working, and it's all very reflexive in the sense of that, higher price can beget a higher price again. And this all works until it doesn't. There will come a day, there will come probably a bear market for Bitcoin at some point where that premium for MicroStrategy goes away, and it could go away very rapidly. We saw that with IEP in May of 2023. That stock for years had traded at a massive premium to the value of the companies that it owned. And it kept moving higher and higher and higher. And then IEP collapsed. And now today they can't go out and sell stock and sell new debt to buy companies, fresh companies, because, there's they would have to dilute shareholders way more than the value that they would get for acquiring those companies. So look, it's not an infinite money glitch. It can't continue for forever, but it is working, and it's working in the current market, and it's working with Bitcoin because Bitcoin is working. I do worry that MicroStrategy and Bitcoin are now becoming inextricably linked. And I kind of worry that MicroStrategy, if it has a big pullback, could actually pull Bitcoin down with it, at least short term. I don't think MicroStrategy long term is going to be the driver of Bitcoin, but I think short term they become so correlated that it becomes a little bit of a risk to Bitcoin itself.
So I wanted to really talk through the bull and the bear case for this, right? Because you say it can't continue forever, right? But what if it does? What if it turns into this thing where, if Bitcoin really does go to 7 and then 8 figures a coin over the next couple of decades, what does that mean for MicroStrategy stock? And is there an extreme bull case that could play out, even if it's not super high probability?
Yeah, for sure there is. And it can be a lot higher from here before it has a big correction, or before the premium, whittles away. But at some point, there's two things that happen. One, I mean, to say that it continues forever is to say that Bitcoin never has another significant drawdown. So if you believe that, then you should be levered via MicroStrategy and levered via, I don't know, take out multiple loans on everything else you own to buy Bitcoin, right? If you think it's never going to have a 20, 30, 40% drawdown ever again. I mean, that's what you'd have to believe that MicroStrategy never stops working, right? The second thing is law of large numbers. At some point, the numbers become so big relative to the rest of the economy, whether it's MicroStrategy or Bitcoin itself, that it starts to either get nonsensical, or it starts to not be fungible into other assets. And so, for instance, let's just take it to the extreme. Like if, Bitcoin's 10 trillion and MicroStrategy's, they own 20% of Bitcoin, and, they're trading at a premium to the value, and they're trading at $1 trillion+ market cap. Can they sell another 100 billion in one stock offering? I don't know. That'd be like the largest stock offering of all time. Maybe it's possible, but you start to run into silly numbers if you play this out long enough, to where it's like, okay, at some point this thing has to slow down. The rate of change has to slow down. The rate of equity issuance has to slow down. And you also, again, I just think you have volatility in Bitcoin historically that you can't say is never going to happen again, right? I mean, maybe in the super bull case, you create this new paradigm, but again, everything that goes parabolic tends to come back down to earth at some point, right?
Yeah. So here, what I think is the most likely situation is that the bull market continues from here. And again, this is my personal opinion, and this is how I'm trading. This isn't financial advice, but I think that we are going to continue to the upside. I know Saylor, it was rumored, I think he's going to meet with Microsoft, and like he's out there being Bitcoin's biggest advocate. And, look at like Buffett, he's got over 300 billion in cash, I think. And so he's losing a lot of money just to inflation, just by sitting in cash. I mean, that's a terrible, terrible use of that capital. And if there's really no good other investments that Buffett can do at this point at that size, right? There's always smaller stuff, but to invest 300 billion, it's like, what are you going to put it in? In my opinion, Bitcoin is a much better place to park at least a percentage of that, right? So I think there is a lot more upside potential. And yeah, I do agree that like we're going to have drawdowns and bear markets and dips and 30, 40% and probably more dips in the future. But does that end MicroStrategy's ability to keep buying, or does it give them an opportunity to buy on dips? Does it cause a complete collapse? Oops, I beat my mic up here. Does it cause a complete collapse of the premium, or is it just a minor blip in the overall bull market over several decades?
It's a great question. I don't think we quite know the answer. I do think, you're going to have inevitable dips. Again, I think like you're going to have corrections in Bitcoin, and therefore you got to have corrections in MicroStrategy. Can MicroStrategy weather that and then continue for the next decade to continue to build per share value? It's definitely possible. But, I go back to also what we saw with something like GBTC. GBTC for a while traded at a massive premium to the value of its Bitcoin holdings. And then eventually that premium just kind of quietly started to dwindle over time. That could also be what happens to MicroStrategy. It doesn't have to necessarily happen in a crash. It could just be that Bitcoin outpaces MicroStrategy for a while at some point. Maybe people stop being so bullish on it, or maybe we get into a choppier market environment and that premium for MicroStrategy just slowly kind of comes down like it did with GBTC. That's also a possibility. So
gotcha.
Yeah. But I do think it's interesting to think about like the Buffett question of, why they're holding so much cash and what that's getting them. Michael Saylor said, look at Berkshire. They're doing this stupid thing where they're holding this cash and, they're losing value to inflation. But the thing with Berkshire is if they make a couple of big acquisitions, or even one big acquisition, they may be targeting 15 to 20% annualized IRRs. Like look at what they got on Apple. Look at what they got on some of their recent investments over the last couple of decades. So they can create massive value from their cash holdings without necessarily having to allocate all of it, at once, right? So it's okay to have cash on the balance sheet for a little while. Now, if they do it for 10 years, that's a problem.
Good point.
I did want to mention on MicroStrategy, I wonder how much of this momentum, I know it's driven by Bitcoin, but also MicroStrategy had a higher short interest. It was pretty high at one point. So I'm wondering if that's kind of contributing to the outsized momentum that it could be having as well. Just people getting squeezed, people shorting it as it's going higher, kind of that cycle.
Yeah, it's become a trading vehicle for sure. And like, I know, Saylor even encourages this with like to use it as an option for Bitcoin. If we take a look at the current short float, it is 17 or 18%. It was highest. Let me zoom out here. The short interest was actually highest during the low, surprise, when MicroStrategy was like, 15 or 20 bucks. The short interest got up to like almost 40%, and it's been falling ever since then. I would be really surprised if any kind of significant short position held from 200 to 500. Do you guys think?
The TradFi guys that are commenting on MicroStrategy in my timeline are definitely like losing their minds, but I think a lot of them are kind of aware that it's a bad idea to try to short this. We've had enough examples of people losing their shirts, trying to short parabolic charts.
Yeah, true.
So thankfully, there's some people that are doing it though. There's some people that are doing it. It wouldn't surprise me to see short interest tick up a little bit here in the next month, but yeah, it's definitely breaking the minds of TradFi though. Like there are a lot of people I know that are salivating that want to short it, that are maybe just waiting for like a break lower to do that. So it'll be interesting to see how that plays out.
Trav, did you see that video clip I sent you earlier today of Saylor on a Twitter space?
Yes.
Any
that was the
thoughts
same
on
one
that?
when he was talking about the cash position of Berkshire Hathaway, right?
I can't remember if he mentioned that, but basically, I mean, he's just talking about the Bitcoin yield and, just kind of re-emphasizing the bull case. And, one chart that I've been looking at that I think is really interesting is MicroStrategy compared to Bitcoin, where MicroStrategy actually just had a breakout of a multi-year like accumulation range here, which was like literally an accumulation range for MicroStrategy buying Bitcoin. So the valuation, the premium over Bitcoin just broke out to a significant high today. It's up like 40% today. So that means, yeah, MicroStrategy is becoming much, much more expensive, which is why, yeah, I don't know, man, when things are going parabolic, it's hard to really guess like how high it can go. But whenever I was back here buying at 200, I had pre-planned this 500 as kind of my main target just based on the prior ranges. But again, I don't know how crazy this premium can get. It could go a lot higher from here, or we could wake up tomorrow and it could be down like 70%.
Yeah, that's right.
I would think people need to really prepare for a significant correction. Like if it does come, if Bitcoin does pull back, right? This is like a levered play, right? So it's going to be a lot harder to fall for people.
Yeah, and I think, I mentioned to Chris earlier today, I said, I think it's sort of flipped to where now MicroStrategy is kind of the tail wagging the dog, at least short term, with MicroStrategy stock actually maybe front running Bitcoin a little bit. Like if you see people start to sell MicroStrategy off, you could actually have a short-term sell-off in Bitcoin, where it's almost always been the opposite, where it's like if Bitcoin's going up, MicroStrategy goes up. If Bitcoin's going down, MicroStrategy goes down, and MicroStrategy more or less reacts to the Bitcoin price. Well, now that MicroStrategy is in parabolic mode and it's the most traded stock in the US market, like people are actually looking at MicroStrategy as the tell for what's going to happen to Bitcoin price. Again, at least short term, the tail may be wagging the dog here. So I think keep an eye on that as a marker as well for Bitcoin.
Yeah, the other thing that I've been thinking about is the difference between MicroStrategy and the spot ETFs, because if the spot ETFs, if Bitcoin starts to sell off and the spot ETFs therefore sell off, does that become reflexive because the spot ETFs, they actually have to buy and sell Bitcoin, right? Where MicroStrategy does not. It can just hold on to the Bitcoin as long as there's not any kind of crazy margin call situation. His goal is to buy and hold forever. So that's the, I guess, I don't know if that's a counter argument to that example, but that's just something that I see as different between the two.
Definitely. Yeah. There's a lot of reflexivity built in. You could imagine if people start to cool off on MicroStrategy for a little bit, that could cause Bitcoin to weaken, which could then cause the spot ETFs to sell, which could then cause Bitcoin to weaken further, which could cause MicroStrategy to weaken further. Right now, we've been in the opposite cycle, which is everything's been in a positive feedback loop. But that's why I try to speak the other side of it, because I don't want people to get too caught up in the narratives about infinite money glitch. They've broken the traditional model. Well, I mean, they're taking advantage of a very advantageous situation, but it's not anything that we have never seen in finance. I mean, that goes a little far.
Yeah. I mean, I think it's always good, even if you're a Bitcoin maxi, to like look at the inherent risks or think through the bear cases, just so you don't get surprised if and when a pullback or a bear market does happen.
I mean, exactly. I guess that's the thing. That's the inevitable risk here, is when does the market close that gap with MSTR versus the, book value of the Bitcoin. And so who's to say that's not going to eventually happen while Bitcoin continues to truck higher? So it's like MSTR, you're taking all this extra risk, it feels like. but for the leverage, quote unquote, right? Am I thinking about that the right way? Like you're taking extra risk by owning MSTR over just owning spot, because eventually the market's going to figure it out.
There's a couple ways to play it. You know, you can either be a debt holder for Microstrategy, which like reduces or eliminates a lot of the volatility, or you can own the equity, which increases the volatility. Is that how you think about it, Trev?
Yeah. And I think, and Nikki's even saying it's like Microstrategy itself is kind of being seen as a leveraged vehicle on Bitcoin, and the equity of Microstrategy is being seen as a leveraged, or option type of play on Bitcoin itself, which I think is to an approximation is a decent way to look at it, because it has been moving as kind of a levered beta play on Bitcoin lately.
Speaking of, Ryan was asking, how does the newly launched options market affect the Bitcoin price? Considering market makers need to hedge their risk, will this result in a potential premium for IBIT? Yeah, so that's another huge thing that just launched this week was we've got options on the spot Bitcoin ETFs.
Yeah, I mean, options can create interesting situations, particularly short term, like for several days or several weeks, where you have gamma squeezes, things like what we saw with GME or what we've seen recently with both MicroStrategy as well as Palantir, Tesla. I think we've seen some evidence of gamma squeezes where there's so much options activity. When there's a lot of option buying, market makers take the other side of that, and then they have to hedge that. And so often what happens is if there's a ton of call buying, especially deep out of the money calls, the market makers will have to hedge their short call position by either buying stock or buying some long exposure. And so what that does is it creates, the buying of the calls creates more buying pressure from market makers, and that can just create that reflexive feedback loop. And so what we could see potentially is if the options volume in the IBIT options, for instance, is so heavy on the call side, if it's very skewed to the call side, what could happen is that creates buying pressure for the underlying ETF IBIT itself, which then would create buying in underlying Bitcoin. So that would be a positive feedback loop that would benefit Bitcoin buying for sure. So far, it's only been like 48 hours, and I think the option volume looks pretty good so far, but it's too early to tell really if there's going to be like that gamma squeeze effect yet.
Gotcha. Yeah. I mean, I think the more markets, the more liquidity, the more people that have access to it, the better. I love it. I mean, there's going to be volatility for sure, but I just think the bull case is playing out. And I think, with the idea of the strategic Bitcoin reserve, if that comes true this year, like, I don't know, things could get a lot more weird from here.
There's definitely a lot of factors affecting Bitcoin right now. It's sort of like there's a whole pool of things, major push and pull factors on Bitcoin right now that weren't always in play, right? You've got the sovereign factor, you've got the ETFs, now the ETF options, the MicroStrategy offerings, right? There's a lot happening to affect the underlying right now.
Yep. Absolutely. Okay. So we've got a few more questions. Actually, we've got a ton of questions. I'm just going to start banging them out. The ones that we can get to. This guy was asking, if you had to ballpark it, what inning of the crypto bull run are we in? I'm going to combine that with a question that Brian sent us too. Thanks guys for the great series. Now that we're at all-time highs on most asset classes, what are the signs to look for stocks, unemployment, consumer prices before a blow off top or recession? So I think a lot of people are thinking about this, right? Like, okay, great. We broke out to all-time highs. Are we just getting started? Are we going to see more upside, or are things frothy and we're going to get a pullback? Or, are we on the cusp of a recession or a depression? So I think there's a few ways we could hit this, right? One is from a market sentiment standpoint, fear, greed. The other is from TA and just looking at what's happening with on-chain factors, capital flow, price charts, things like that. And then the other thing is the macro side and looking for, the unemployment situation and inflation and all that. And when you combine those three things, that's usually when you get a clear picture of what could happen, or at least what's most likely to happen. So We can do TA here in a second, but Nick, I'll kick it to you. Is there anything that you're seeing on the macro side from the consumer or on the market sentiment side that you think is signaling a top or a recession, or do you think we're still midway through this bull market?
Okay, so there have been signs of a slowdown in certain things. Like, for example, we have seen a slight uptick in unemployment claims, but it's still, if you look at the overall long-term trend, pretty reasonable, like nothing to get too concerned about that I'm seeing on my end. Inflation was a concern. However, I think that due to the way shelter, lags, and a few other factors, that could just be a blip in the overall trend downward. So I'm not too concerned about that either right now. Retail sales have been holding up. We actually got a lot of retail earnings this past week, and it was very interesting. And I think it tells kind of a lot. So Walmart did fine. I mean, Walmart is just chugging along. Their comps looked great. Revenue growth looked fine. Nothing like blowing it out of the water, but the stock was up. Investors liked it. It just keeps chugging along. On the flip side, that Target was terrible, down 20%. It was a disaster. Target's a disaster right now. It's a dumpster fire. Unfortunately, I'm long, so
Oh no.
yeah,
What happened?
well, they've been having some issues with inventory over the past few years, kind of getting that under control. Margin issues. Management needs to get it together. So that was not what we wanted to see, because Target was a proxy for discretionary spending, and it might be more of an issue with Target than it is the actual consumer, because TJ Maxx looked okay. Comps were pretty, run of the mill. And then Williams-Sonoma's stock was up. I don't know what percentage, but if you pull it up, you'll see a huge gap up on Williams-Sonoma, even though
What's the ticker?
WSM, and they own West Elm Furniture. So think furniture, Pottery Barn, West Elm.
Big gap up today.
Big gap up today. Comp was, I think revenue growth was slightly better, but still negative. But they, I guess, are seeing some improvements on their end. So people are spending there, so to speak. It's interesting to see the differences between the retailers. So with all that being said, I think that I don't foresee a recession yet anytime soon. In fact, earnings estimates for 2024 are expected to be 9.3%, and for 2025 they're expected to be 15%. So the market, or analysts, which this can change, are basically, it's pricing in growth for 2025. So either the analysts are very wrong, or the consumer just kind of holds up, and things just kind of continue along from here as rates continue their downward trajectory, hopefully. So I don't know. That's a long-winded way of saying I'm not concerned yet,
Gotcha.
especially
Okay.
with rates coming down.
Cool. So there's no big flashing red lights that are like, hey, dump everything. I mean, I know there's always a bit of a mixed situation where some things are bullish, some things are bearish, but you guys don't see any like just glaring risks right now on the macro side.
I do see the potential, but I do see the potential for maybe the market to trade in a range because of valuation, where valuation is. That's my concern, is valuation. Anything to add to that, Trav?
I mean, yeah, I don't think the stock market is in extreme greed territory at the moment. We had a pretty big rally post the elections, but a lot of that has actually come off just in the past week and a half. Equity markets have had a pretty decent correction here in the last 6-7 sessions. So we're not really in extreme greed territory. Valuations are at high levels. It's definitely getting harder to find bargains, but I don't think we're not at obscene valuations. We're not at obscene sentiment levels. So that looks fine. The macro looks fine. Don't see anything, near term that looks like it's ready to derail the bull market.
So I know you guys don't exactly put all your faith in the Shiller PE ratio, but we are up near not all-time highs, but we're definitely in the more expensive category. Do you think this is a good thing to look at? Is it overblown? Are there better valuation metrics that people could pay attention to? Or do you think maybe we're going to go into a new paradigm of AI and technology where maybe we set new highs in the PE ratios?
I absolutely loathe the Shiller PE ratio.
Why, Travis?
It's a flawed metric. Even the way they calculate it, I remember diving into the actual calculations of the Shiller PE a couple of years ago, and they weren't even using updated S&P earnings metrics. Like they were using a backward-looking S&P earnings number that didn't account for adjustments, and so it was vastly overstating the PE. As it is today, by the way, the S&P, the Shiller PE ratio says it's 37. The forward PE, the forward actual EPS ratio, or I'm sorry, the forward actual PE ratio for the S&P is at like 21 or 21 and a half. So that should just show you the massive gap there. Now the Shiller people will say, oh, well, that's because, the Shiller is trying to, it's not adjusting for all these things that shouldn't be adjusted for, like stock-based comp, whatever. Well, the market doesn't trade on Shiller PE. The market just doesn't care about Shiller PE. It's not a good metric to use if you're trying to look at forward returns. So yeah, I don't put much stock in it, to be honest. But 21 and a half of the actual forward PE is elevated relative to its 10-year history. Not massively elevated, but it is at the higher end of the range. And so the problem with that, again, is that valuation multiples are really hard they're not good indicators for forward returns. And it's really hard to figure out, like, if we're going to see multiple compression or expansion from here.
And then I'm hearing 2025 price targets of like 7,000 S&P.
Yeah.
And I'm like, okay. How?
Yeah, to be honest, I thought this year was going to be a more muted return year for the S&P and the NASDAQ, and that's been incorrect. So 2025, I would assume, hey, we're going to have a cooler year for overall index returns. I think some stocks can continue to do very well. My forecast would be, S&P probably doesn't have quite as good of a year, but I might be wrong again, and S&P might have another crazy bull market year. It wouldn't shock me to see that.
Yeah, I mean, if we take a look at the TA, which I know is what most people want to think about, so let's go ahead and do it. We had basically, so for you guys listening on the audio, we're looking at a yearly chart of the S&P 500. So every candle represents 1 year. From 21, 22, 23, they were basically in the same range. Okay, so we had a big year in 2021, we had a pullback in 2022, we had another big year, but basically we had a massive trading range for 3 years. 2024 started the year off bullish and broke out, and we're up over 20% on the S&P 500. So this is, if you're just thinking about TA, this is like a fresh breakout to new highs and like establishing a new trend. The last time that I can really kind of compare this is kind of like 2013. So whenever stocks broke out of the lost decade, right, from like 2000 to 2010 or 2012, stocks were in this like trading range, and then we broke out to new highs, and that led to this multi-year breakout, this run. So the question that I'm thinking about is like, okay, is this a sign that we're getting a fresh breakout in the next several years? Maybe we have, pullback years, but it's going to be just part of a new leg to the upside. When you look at a little more detail and you look at a monthly chart, you can see the patterns a little bit more clearly. But I think that's kind of the thing from a TA basis that I see as the most clear, is just that yearly breakout. And hey, is this going to be continuation of a multi-year leg to the upside? Or is there going to be some kind of trap or some kind of economy thing that causes a much deeper pullback, right? Obviously, a yearly chart is hard to trade off of, but I really am a fan of zooming out and looking at the big picture, just like we could do on Bitcoin, right? The same thing happened with Bitcoin. Is this year we had a breakout and got above last year, or not last year, but also the 2021 high for the first time. And we're seeing kind of a similar type of move on Bitcoin. What do you guys make of that? Do you put much emphasis on the longer term charts? Do you think there's some blind spots there? What do you think?
I mean, I think it's nice to look at those longer term charts. I just think that looking at the daily for me is just, there's so much truth in it, and it helps me way more than looking at like a monthly or, those longer charts, those longer time frames. So I really pay more attention to the 200-day moving average and see where prices in relation to that, to make sure that, see where we're at in terms of how many times have we touched it in the past few years? Have we touched it at all? And that kind of guides me on the overall trend more so than anything. For example, I think we went through a period not long ago on the NASDAQ that we hadn't touched the 200-day moving average. I can't remember the exact time frame, but it was long enough to where I was like, okay, a correction feels like we need to be preparing for this because this is getting ridiculous. And and ended up correcting back to the 200-day moving average. Same with S&P. So that's kind of how I am honing in on where I think trends are going to go from here. And for right now, especially with the S&P 500, Bitcoin's a whole nother story, but I think that the trend doesn't look too terrible. I think technically it could stay pretty sound and steady on this bull run. We've already tagged close to the 200-day not long ago. So I think there's juice to squeeze in the momentum. It's more so about like the value, combining the valuation with what's going on in the technicals. And that's where things kind of get a little hairy, I think, for me.
Yeah, we basically we had the Trump pump, right? So the week of the election, stocks broke out to new all-time highs, and then we're basically pulling back and consolidating. But yeah, I agree. Even on the daily chart, I mean, there's nothing inherently bearish about that. The one chart that I think looks the most juicy, in my opinion, is the Russell 2000. This thing to me just seems like a rubber band, like coiled up, ready to go. Who knows? In a year, I could feel foolish about that opinion, but I think, this is kind of a story that could play out is, smaller cap. If we have a good year or two, there could be a lot of breakout trades in smaller companies that are not the Mag 7. Have you guys had any more thoughts on that over the last couple of weeks? Like, are we going to get rotation into small cap, or is the Mag whatever, half dozen or dozen, are they going to continue to dominate the gains?
I know I've been, rotating in a bit. So yeah, I think that there's some value there. I more so the mid cap side. I think that a lot of people are probably under allocated to small and mid caps. Honestly, everyone's viewing and chilling, but I think that there's a lot of return potential in the small and mid caps to be had going forward.
All right. Well, let's take a look at Bitcoin. So yeah, I mean, in light with just looking at the bigger picture, obviously this is a massive monthly breakout candle that we have. Usually whenever we've had monthly breakouts like this in prior cycles, this is just the start. So this is kind of the second half of the bull market cycle, I think. Is this the top? I don't think so. I think we're going to get, multiple months to the upside here. Obviously anything can happen and we can trap, but for me, I'm still holding. I think we're going to get, hopefully, I'm praying and hoping that we're going to get 100K by Thanksgiving so we can have some entertaining dinners with all the aunts and uncles and Bitcoin haters. But yeah, I mean, I think we're overextended on some of the shorter term charts. If I just pull up my my weekly, I mean, we're going on 1, 2, 3, 4 green weeks in a row. We're obviously coming off of but midway through a really big green monthly candle. We haven't really had any kind of pullback on the daily yet. So do we either get parabolic from here and rip through 100 by the end of the year? Or do we get a retest of that breakout level at 75K? Those are kind of the two ways that I'm planning my position sizes right now. All right. So just taking a look at some questions. I know we're kind of answering these questions before we get to the questions. So I'm just pulling up things, seeing if there's anything that I haven't already covered. One question that Matthew was asking is, with us being at all-time highs, And in this all-time high territory, what are the criteria for taking new positions? I think this is a good question, right? Because there's a lot of people that are either feeling like they're underallocated or they're looking for more opportunities. What do you do when you're kind of midway through a bull market? I know the answer for me is I look for bull market setups. I look for breakout trades. I look for dips. I look to manage my risk where I'm not DCAing in up here. As we've talked about before, the best times to DCA is to double up your size in bear markets. But if you're going to buy up here, you buy with predefined profit targets and you get in and you get out and you grow your sizes. That's what I think is the best strategy. So you don't end up buying high and then selling low. It's like buy high and then sell higher. What are you guys looking for out there? Are there any tickers or segments or things that you guys are bullish on, or any theses that you have?
I want to touch real quick on that question around buying up here, because I'm getting this question a lot. And first of all, when you look at Bitcoin's chart, it does appear that it always seems to give a pullback opportunity. Maybe you're not going to get a pullback back to, 60, 70,000. I don't know where the pullback's going to end up ultimately falling, but eventually it seems like you always get that opportunity. Does that track, Chris, with what you've experienced as a trader in Bitcoin? That there's always like a pullback opportunity to come to where it makes it a little easier to not stress about perfect buys and
Yeah, it's like as soon as everybody starts feeling like prices running away and they're not going to have any opportunity, that's when a pullback happens.
right.
So, yeah, the moment where there's peak FOMO, peak euphoria, oh my God, new paradigm, we're going parabolic into the moon, and you've missed the train. Boom, there's the pullback. So yeah, there's always a pullback. There's always a lower high that you can buy. There's always another breakout you can buy. The worst thing you can do in a market like this is buy into big green days and buy high. So I'm looking for fresh breakouts. I'm looking for juicy dips. That's why a rules-based approach that we talk about in the wealth building community is so key, because without that, you're just guessing.
It feels like this thing wants to try to run to 100K, and I imagine that's going to be a huge reactive area if it does get there, where that's where the pullback could come from.
Tons of volatility around that.
I don't know if it's going to 105. I don't know if it's going to 103 or poking through and then coming back down. Resistance right at 100. I don't know. But I would say that for people that are wanting to buy here into a breakout that's already broken out, we're in the trend, that can be a little tricky, like you said, and that's usually when the rug gets pulled. So I would encourage people to be patient and let Bitcoin do what it's going to do. Usually those big round numbers are very reactive areas where pullbacks can come from.
On the stock side, I think it also depends on if you're a passive or active investor. Like on the active side for us, picking stocks, we're always trying to think of, okay, what could be a narrative, 3 months, 6 months, 12 months from now that is not really super strong right now. So like we're thinking through even potential trades for 2025, what out of favor sectors could come into favor, what out of favor stocks, or even what stocks are just kind of under the radar or in accumulation phase that could be interesting. I called one out on our market update on Monday. And I think that's one way to play it, is like, okay, so like maybe you're feeling like you missed some of these hot stocks that are going parabolic in the current market now. But what are going to be the next plays? Because there's always a bull market somewhere. Even in a bear market, for the overall market, there are stocks that like double in value every year. So that's what I'm always trying to think of, is like thinking forward. Okay, what areas are unloved now that could come into favor or could be interesting or could be interesting dip buy opportunities. So that's what we do in the community on the active side. I would encourage you, if you're doing active investing, think about that. And then like you said, Chris, also, buying dips works. Even on stuff like the Mag 7, we've run the data and showed the data before, where it's like, hey, even the largest stocks in the world, the most successful companies in the world, have 30 to 40% corrections when the market overall corrects 5 or 10%. So there'll be opportunities to buy dips almost every year. That's another way to play that, is, kind of just being patient. You don't have to always be buying into FOMO.
100%. Yeah. I mean, there's unloved areas in the market right now, like China stocks.
Yep.
And yeah, several things that I'm just thinking about. I'm like, all right, when do these rotate? When does something good happen here? Not that, you should just yeet into Chinese stocks, but I know like Michael Burry's doing that, right?
Yeah, and Chinese stocks are a trend that I think could have some legs for 2025. They are unleashing stimulus. They've waited, they've kicked the can down the road on direct stimulus for consumers, but there's been hints that it's going to be detailed and come into play in early 2025. And we saw how fast those stocks rallied in the fall when the initial stimulus news leaked out. So if they follow through with the direct Chinese consumer stimulus in early 2025, those stocks could see a resurgence, and there's definitely some potential plays there. So yeah, you called that a good one. We've talked about it. I think it could be a potential opportunity, but we have to kind of wait and see too. We're not like totally yeeting into it, like you said.
Yeah.
Not yet.
Yeah. One thing, so I'm looking in our Discord, Dragus just asked a good question. Do you see any potential black swan risks that are looming? Something that kind of freaked me out this week was the fact that we're now, not we, but I guess a proxy of we in the US is sending missiles deep into Russia. So, that little thing called World War III or a nuclear war or any other like black swans. And I know, again, black swans are impossible to predict. That's why they're called black swans. But are there any things that you guys kind of think could happen that might be some kind of surprise that could throw us off here?
You mentioned the nuclear threat. Obviously, there's an interesting question there because of the new incoming administration. Could that actually change up the politics of that whole war? And that's a possibility. But there's still some time before the new administration gets into office. That's certainly one area that we have to keep an eye on. The Iran, Middle East, Israel conflict still an area where I think there's stuff happening we got to keep an eye on. Frankly, one thing I worry about in the U.S. is internal like terrorist attacks, like 2001 9/11 style stuff. Because if we remember back, that actually put a pretty big dent in the overall market and made an emerging bear market and a very deep bear market. So we're in a little bit of a different market environment now. So maybe it wouldn't have the same effect, but there are possibilities there that always concern me with, potential for terrorist attacks. That could be a black swan, but they're black swans for a reason. Like you said, you can't really predict them, but there are things like that, back of our mind, we're always a little bit worried about, but
yeah, I'm constantly thinking like, what could make everything I believe wrong? So, like let's say that Trump's like, you know what? I hate Bitcoin now, and we're not doing this reserve thing. Not that I expect that to happen, but I'm always like trying to like memento mori. Like I have a. So yeah, Ryan Holiday puts these out. Memento mori, right? Like remember death. I always try to like do that with my investments too. It's like, why could I be completely wrong, or what could completely blow this up? And even if you're not right, even if you're not thinking of things that will actually happen, it's like, at least you're open to that and you're training your mind to be comfortable with thinking like, what if I'm wrong? Because so many people, they seek to validate their own biases, where it's almost like a muscle you have to exercise to think, well, what if I am wrong? And that creates the confidence to cut losses early or admit that you are wrong and not become a bag holder, things like that. The other side of that equation is, what if I'm right and I'm like super, super right? Like Carvana. Did you guys see the Reddit guy that made, what he make, 11 or 12 million bucks on this?
Off of what was 100 or 200K investment at the bottom or near the bottom?
Yep. Like yeah. And you guys were buying this. Nick, didn't you have some like longer term options?
Yeah, I bought it, I think at $10. I don't want to talk about it. I sold it.
Let's talk about it because you made a lot of money on it. But like, what I wanted to ask you guys that I wasn't 100% clear on is like, okay, so for anybody that doesn't know, Carvana is one of the best performing stocks right now. It basically bottomed around $10 and it's up at 250 now. So like, why was it so beat? Because it came down from like almost 400. It was beat to hell. It had a reversal. And then like, it just kept going. And I want to look for these plays in 2025. I want to catch like 2 or 3 of these beasts that just keep going. So what the hell happened?
Well, Carvana was a victim of the 2021 bubble, so to speak, valuation bubble, where everything was going up and everyone was buying cars with their stimmy money and all that. And then, the market flipped, caught a lot of people off guard. And yeah, and then they ran into some trouble and rates went up and people probably weren't buying as many cars. And they ran into, they had a lot of debt, which I believe they still have debt, but
Yep.
maybe they raised some
They had to
capital.
raise some capital. Yep. They had to raise some capital at lower prices.
But a lot of people shorted it.
Yeah. A lot of people thought it was going to be a zero. A lot of people, even after they raised capital, I think it was much lower than the peak. I want to say it was at 40 or 50 bucks a share. They raised capital. They may have even raised another round at like 25 or 20. But stock went to what, $3-4 at the bottom. It was $1 billion, $2 billion market cap at that point. It had been a $300 billion market cap. A lot of people thought it was going to zero. Yeah. And then the turnaround started to work. They reported, slightly better results than the prior quarter. They're focusing on margins, improving margins so that they could, eventually get to profitability. One improved quarter turned into a second improved quarter, turned into a rapidly improving business, and the financials turned, and then the sentiment and the multiple turned on the stock, and it was it's just a massive success in terms of a turnaround, both in stock price and in the underlying business.
So what I think is so cool about this is it had the technical element, right? The chart was just a beautiful like turnaround chart, but the chart alone didn't do this, right? It was a combination of the business, the economy, the technicals, and market sentiment. So when you have that combination of just everything that works, that's what can send prices to go nuts, right? And that's what I think we love to think about and try to find these ideas early. And so that's what I'm going to spend 2025 doing. I want 2 or 3 of these. I want a few like just multi-million dollar trades. And hell, they might be, raccoon coin or rock coin, meme coin that I make $50 million on. I don't care. I just want something crazy. I want to have a huge year next year.
Travis, my mind is still blown at this gap between Wayfair and Williams-Sonoma.
Yep.
What in the hell? This is what I think could be the next big thing.
Ooh, you heard it here first, folks.
Maybe.
All right, what's going on? Wayfair, ticker W.
People sleep on Wayfair. I think Wayfair could be a multi-bagger, maybe not in the same vein as Carvana, but it is kind of a similar story in the sense of it was a 2021 COVID boom darling. Housing market was on fire. Wayfair sales on fire. Stock, went down 80% from the peak. Business is slow because the housing market is slow because of high rates, but they've got a little bit of debt on the balance sheet, but they've been able to pay off near-term debt and raise other debt. The margins are slowly improving. It's the valuation multiple on it is, near its lows. So yeah, a little bit of positive momentum there, I think could be a 2-3x in the stock pretty quick, and maybe in a really bullish environment, even better than that. So yeah, I definitely think people are sleeping on it. The Williams-Sonoma results are kind of surprising to me because every other indicator we have in the housing market right now is suggesting that that it's still pretty weak. Like you look at like existing home sales and, rates went back up. And so like everything else, like even other home builder stocks have been down recently, but the Williams-Sonoma results are like, I need to take a look at those today. I haven't actually dived deep, but that might suggest there's some underlying improvement happening that could be a catalyst for some of these other stocks like Wayfair you mentioned. So we'll dig into that a little bit more for sure.
Interesting. Yeah. Just looking at like from the lows, Williams-Sonoma is up, call it 200%. And Wayfair is basically flat depending on which price you use, but it's been in this accumulation range. So it could, if it has a breakout, I could see that chart looking like Carvana, but again, like a lot of things have to go right for it. And it has to be that like reflexive, like turnaround story. But yeah, this is like the perfect type of chart that I'd like to see something like that play out in.
Yep.
Cool. All right. Well, we've been going for well over an hour, so we can start to wrap it up. I know we didn't get to everybody's question. There was one more question that I did want to hit. So Drew, one of our OG community members, said, for the crypto profit takers, what could be some places to rotate capital that are showing value, non-crypto related? So this is another problem that people run into during a bull market is they trade, they extract capital, and they go, oh shit, I got all these like fiat dollars. What do I do with it? Right? They're feeling like Warren Buffett sitting on 300 billion. Do you just put it back into Bitcoin and hold the Bitcoin for the kegger? Do you trade another asset? Do you mortgage your house so you can buy some meme coin? What do we do?
Take that back.
Come on, Nikki, financial advisor. We're risk on. We're going to lever up. We're going to go crazy risky in 2025, aren't we?
Oh, I don't know. I don't know. Probably.
Trade less, profit more.
It's probably going to
Everybody
be
watching the video, you can see my shirt.
I'm sensing 2025 is going to be a nutty year.
Yes.
But we'll see. Anyways, where to put money? Where to put profits?
Yeah, that whole thing. What do you do with profit?
You know, it really depends. Of course, that's the answer to that question. You know, for a lot of people that I'm talking to right now, it's about diversifying out of crypto. You know, trying to get that long-term stock exposure. And if you've got decades, you know, you're not too concerned with timing the market. But I know Drew, and I know that he probably is a little bit more in tune with the markets and wanting the value. And finding the value right now, you got to get your hands dirty with some fundamental analysis in stocks and looking at individual names, scanning for, you know, lower PE ratios, showing revenue growth, low debt, you know, those types of metrics to try to find some of these gems. And they're out there. Trav, I don't know if you have anything to add to that.
Guys, this is the real gems here on Dex Screener. Beetle coin, weight coin.
Vomit.
Yeah, look, there's different capital buckets, right? You've got your long-term compounders and you've got your short-term degen. Let me turn $5 into $1 million. So I don't know what capital bucket he's talking about there, but yeah, you could go value in the stock market, or you could go degen over here and risk it for the biscuit.
Oh my God.
I think it's really a tough problem given where we are in the cycle. One area where I think I want to spend some more time in the next couple months is non-US stuff, because there are, you know, other markets. We mentioned China, but also even places like Europe or Western Europe where, you know, capital markets there, you know, have not delivered good returns in the last decade or two, but there are some gems in those markets, and there are a lot more values, you know, in some of those areas. And so, like, I'd like to spend a little more time sifting through. It's hard to find a place where you could just from a top-down level allocate because it's so obvious, and it's like, you know, it hasn't run yet because most asset classes have run. Gold, stocks, crypto, we're all up heavily in the last 2 years. So it's not, I think it becomes a harder game of, like Nikki said, really maybe finding some single stocks, some countries where like maybe there's some opportunities because things have lagged a little bit. Maybe even areas like energy, maybe there's some opportunities there because it's so hated and washed out. Like the momentum factor in stocks has been so strong over the last couple of years that I think, you know, it almost like screams like, hey, like look outside of momentum, even though that's what's working. So maybe what you do is a barbell where you have some stuff that like is like risk on, let's just keep riding the trend. But then you also spend some time thinking about where can we accumulate that's out of favor. A lot of what we talked about earlier, just like looking for what's going to be the next trend, thinking forward a little bit. That way you can capture kind of what's working now and what do we think could work in the future that could bring big returns.
Yeah. I know one of the popular narratives is obviously AI, robotics. Like there's a lot of extremely loud bulls on Tesla and robotics and, AI as a narrative, which is obviously a huge potential market. Something I've been thinking about is like, well, how do you express that view in a way where you can like just manage risk? Like most people can't buy equity in OpenAI or Claude. And Tesla is, you've got a whole bunch of risks in the short term there. But it is really the only like public major player in the robotic space. So yeah, I don't know, Trav, I know you thought a lot about this. Like, what's your view on it? Is it something that you're ready and willing and just ready to like hammer, or are you, more caution, or where you at?
Yeah, I mean, I think I'm a little bit cautious near term on AI stuff just generally. We'll see obviously what happens today with NVIDIA. Well, I do think 2025, hopefully we'll get an IPO cycle. We'll have the conditions right to get some more companies coming public. And Figure Robotics is one company that's been mentioned. Anthropic has been mentioned. We'll see what happens there. I'm hoping that we'll have some more just public stock plays for AI and for robotics. There's just so few, like you mentioned. I think Tesla's always been a difficult one for me just because like the business is not valued on the existing business today and what it's producing from a profits perspective. It's always been about these future bets. And so it's just really hard for me to conceptualize what that's worth. But I do think like if you're a firm believer in the Super Bowl case that the humanoid robots are closer to working than not, like if you believe that humanoids that Tesla's going to be selling these things within 3 to 4 years, I think you probably want to own the stock. If you believe it's more of a 10 to 15 year bet, then, I think you're paying a pretty high price for that today. So yeah, I think it really just kind of depends on your viewpoint there. And I'm a TradFi guy, right? So I'm always going to be more of a skeptic. Like I'm always just like, I'm going to need to see a higher burden of proof, which probably means I make less money than everyone else that's just aping in. But I'll keep
Trav,
an
are you
open
really
mind.
TradFi with all the meme shit coins you're
You
trading these
used to be.
days?
Yeah, look, I
You're
try
kind
to
of
keep an
hip.
open mind.
Yeah, you're hip
Yeah.
now.
Well, just
Yeah.
taking a look at the chart, I mean, obviously this breakout above 275 on Tesla was driven by the election, right? Because I think if Harris had won, this thing would have gapped down and been terrified of the blowback from the Democrat Party. But yeah, now that, Elon's the head of Doge, I don't know if this is necessarily good for Tesla. I don't know how it's going to make him more efficient, but as far as the TA goes, it looks like we are in bull market territory again. I mean, broke multi-year highs. We're now above all the moving averages, and we're still below the 2021 hype highs. But yeah, I would be actually interested in some bull market setups here, like maybe a dip to retest 275 or another breakout above 350. Like this thing's back in play.
Yeah, well said. Yeah, I mean, I think it's definitely tradable, and especially if we stay in a full-on bull market, like it probably works at some level. And so yeah, especially if you can get in on a pullback. Yeah, I mean that makes sense to me.
Awesome. All right, guys. Well, we have covered a lot of stuff. We're almost an hour and a half in. So let's do this. Let's do a quick wrap up. I'm going to talk about like what I'm looking for over the next week. But Nikki, Trav, what are you guys paying attention to? What's on your radar? What's something that people should be paying attention to? And go.
Well, the Memecoin TikTok stuff is definitely like full on in play right now. I don't know how long that lasts. I don't know if it fades out, but like if you're, in crypto, you gotta think through that. You gotta like, poke around and see if there's something there. Definitely going to be looking at that and seeing how that evolves. And maybe seeing if that bleeds over into the stock side as well, because we've got, quite a bit of action that we've had in stocks, but it's cooled off. So like if we get, full on crazy bull season in alts and in meme coins, like that may also bleed over into stocks. So I'll be watching to see how that could affect stocks. And maybe if we go into the holiday season, like just with like full on bull territory. There's not a ton of like major macro stuff in the US. We have a market holiday on Thursday and a half day on Friday next week. So sometimes that causes things to be a little bit snooze fest boring. So we'll have to see how that plays out. But But yeah, definitely going to watch how things evolve here with crypto bleeding into the potential for stock trades.
Cool. Nick?
I'm watching the S&P 500 pullback. I want to see if we're really going to see something substantial or if this is just going to be another run-of-the-mill, shallow, mini nothing burger pullback. So I'd like to see some cheaper valuation, action in the S&P 500 right now for a lot of people, especially crypto people that are trying to diversify out. It's like, where do you go? And so I'm watching the pullback there. And we have a lot more retail earnings to go. So
yeah, we've got NVIDIA in like 2 hours. So interesting timing for this. By the time you're hearing this, NVIDIA probably threw a big wrench in the markets. Or Trav, I think you think it's going to be not as impactful.
Yeah, I think it's just getting harder for NVIDIA to surprise the market. And, I just think people have been so overly focused on NVIDIA earnings the past couple of quarters. And I don't know. I just think the most likely outcome is a nothing burger, and it just like, not doing a whole lot. And people just kind of after the earnings report being like, okay, like I'm bored now. I'm bored with NVIDIA.
What's
like
the
it's
next
not doing
hot
anything
thing?
shocking anymore. Yeah. What's the next hot thing?
Cool.
Hot dog coin.
Yes, exactly. All right. So for me, I'm looking at Bitcoin's price. That's about all I'm looking at these days. Sometimes I'll leave the house, but yeah.
Can confirm.
Right now, I'm just looking at this 95K zone. The market has been tiptoeing up to it. So when you zoom out, you can see this like bull flag potentially. Watch, it's going to take off like right after we close this. No, we've got just a week until Thanksgiving. It would be nice if we had 100K. That way, all those conversations, Bitcoiners would be just totally justified and be able to snoot at the aunts and uncles that talk shit. Just kidding, but not really.
More likely, you could see a pump into Thanksgiving as families are like, hey, I need to buy some Bitcoin. How do I do this? And then people just start buying Bitcoin because it's the big talk at the table.
Yep. I remember over a decade ago at Thanksgiving, making everybody download wallets, sending them crypto, and then going, what? And the ones that held on to it are very happy, and the ones that didn't are not doing so well. So
yeah, I think that could happen. Thanksgiving pump.
Let's go. Turkey pump. But yeah, that's about it. I'm just looking at that. I'm looking for opportunities. I want to have some massive trades in 25 that just kind of take my net worth to the next level. So that's what I'm looking for.
Boom.
All right, guys. Thanks for all the questions. Sorry we weren't able to get to all of them, but I think we covered most of the themes and the topics. Again, if you enjoy the show, please share it with a family member that is a no coiner or lost all their money in a crypto scam or just needs help. That's what we're here for, to change lives. And if you want to get into our community, go to wetalkmoney.com/community. Check out our Discord, our live classes, our alerts, all that good stuff. Nikki, Travis, thanks for being here.
Thank you.
Thank you.
All right, guys. We'll see you next week.
See ya.
Cheers.
Peace.